Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from Bangalore studio is Ritu Singh. These are the top headlines from the startup world. The retail portion of Grow's 6,600 crore rupee initial public offering has been fully subscribed on the first day itself. As of 4 p.m., total subscription stands at around 50%. Ahead of the IPO, the stockbroking firm raised nearly 3,000 crore rupees from anchor investors. It's the final day of bidding for Lenskart's 7,300 crore rupee initial public offering. As of 4 p.m., the company witnessed overall subscription was booked over 28 times. This was led by non-institutional investors, and this was followed by a retail portion. The IPO comprises a fresh issue worth 2,150 crore rupees and an offer for sale of 12.75 crore equity shares. The National Company Law Appellate Tribunal allows WhatsApp to share user data with parent Meta and its subsidiaries for advertising purposes, sets aside a Competition Commission order that had barred the flow of data, also sets aside a CCI order that held WhatsApp's 2021 privacy policy is unfair. Meta welcomed the judgment, saying personal messages remain end-to-end encrypted and that WhatsApp's business features support India's digital economy. Tech giants race to expand AI and data infrastructure as demand outstrips capacity. ChatGPT maker OpenAI signs a $38 billion cloud computing deal with Amazon Web Services, pivots away from Microsoft, which was the company's exclusive provider till earlier this year. The deal will give OpenAI access to India's graphics processing units. Amazon closes at a record high. Chip maker NVIDIA hogs the spotlight as the AI race gets hotter. Microsoft signs a $9.7 billion deal with data center operator IREN to gain access to NVIDIA chips. Cloud computing startup Lambda announces a multi-billion-dollar deal to build AI infrastructure powered by NVIDIA chips. Those were the headlines that we're tracking for you this evening on What's Brewing. India's growing appetite for high-quality farm-fresh food is powering the next wave of innovation in the country's agri-supply chain. And Noida-based startup Fambo is leading that charge. The food solutions company, which supplies fresh and semi-processed ingredients to over 1,000 restaurants and cloud kitchens, including McDonald's, Burger King and Barbecue Nation, has raised 21.55 crore rupees in a Series A funding round led by AgriSure Fund, managed by NAB Ventures, along with EV2 Ventures. The capital will be used to drive expansion, product innovation and tech upgrades as Fambo looks to scale its farm-to-fork model nationwide. Joining us now to discuss this further is Akshay Tripathi, the co-founder and CEO of Fambo. Akshay, thank you so much for taking time out and being here with us on Startup Street. You know, you are a food solution company, right? If you could sort of take us through what you have on offer and the gap that you're trying to address.
Yeah, hi. Thank you so much. Pleasure to be here. So what do we mean by the food solutions here? We started in 2022 and we saw the gap in the agri and the food supply chain. Now the kitchen space for all the food service operators, they want kitchen space to be as minimum as possible, and they want to have the product which has to be more into the ready to eat format or ready to cook format or ready to use format. That's where the Fambo comes into the picture. We operate our micro processing center, which are the processing centers in the heart of the city, which link the network. Currently, we have a network of 5,000 farmers who grow dedicatedly for us. And then we map it. They map the production with rapid order-based management system, having the automated process in-house, and we club the customer orders. So the customers, which are the food service likes of Burger King, McDonald's, California Burrito, Burger King. So what they get in place is like the quick fulfillment of their store. They maintain the optimal inventory levels at their store, thus reducing the wastage, reducing the work which goes inside the kitchen, reducing the rental cost which goes in, and of course, getting the consistent taste at each of the outlets. So that is what Fambo does, where the aggregation comes up from the farmers to the processing and to the outlets having the proper inventory at all the times.
Sure. You've raised this 21.55 crore rupees in the Series A round, right? So what does this milestone mean for the company's next phase of growth, and how do you plan to use the funds?
So actually, this fund is actually led by the AgriSure, and we are the first investment from the AgriSure, which is launched by the Honorable Agriculture Minister last year. So here, what do we plan to use this to scale up our operations in Pan India? Currently, we are operating in North India. So in North India, what do I mean? Not just in the NCR, but be anywhere in the states of Delhi, Punjab, UP. Now we'll be expanding our operations to the west like the states of Maharashtra, Gujarat. Second, the tech upgradation which will come up. So we actually are using the high-tech supply chain tech here, both in the form of software and the hardware. So hardware upgradation which will come up. Second, the third and most important part is the expansion of our team itself. So the team expansion, which will further lead up the farmers' network expansion and pushing up the product lines in the form of frozen and ready to use and ready to cook items. So this will be the fund deployment here, where we'll be expanding the geography and of course the product range.
Sure. You're already serving 1,000 plus restaurants, including QSR giants like McDonald's, Burger King. How do you sort of plan to scale this network across India? And what new regions are you looking to enter?
So new region, what we are looking to enter is the west of India and then subsequently to the south of India. How we are managing it is like it's completely a game of supply chain. So how efficient the supply chain can come into the picture. So majorly in Indian agri or the food domain, if you talk about, there is the lacuna in the supply chain itself. So 30% of our food produce or the agriculture produce goes into the waste. Now, Fambo uses the tech-enabled supply chain. What do I mean by this? Is our logistics is AI optimized, our cold supply chain, which ensures the minimum wastage. So this enables the food services to have the perfect product at each of the outlet. And of course, the joint logistics where we merge of the load of different customer in the optimized way, they get the cost saving. So currently we have already started to operate in the tier 2 of North India. So like if I talk about the cities of Punjab, which we completely cover, and the cities of UP, and we'll be live in the Uttarakhand as well. Same model will be replicating in the west, starting from the Mumbai region, expanding to Pune, catering to city of Gujarat and the tier 2 cities near about it. And similar models will be adopted in the south of India as well.
All right. The company is also targeting an ARR of 50 crore rupees by the second quarter of FY26, right? And you also want to maintain profitability. So what's fueling this financial momentum and where do you hope to end this year?
So if I talk about profitability, we achieved profitability in the H2 of FY25, and we want to grow profitably. That is in the vision of the company, and that is where the company is headed to. This year, by the end of this year, we want to have the realized revenue of 50 crores, not just the ARR, but the realized revenue. That is something we are targeting. But yes, profitability still remains the major driver, and we want to grow in a sustainable way where we generate the shareholder return as well. And of course, the goal and the expansion of the food solution expands to the different customer and to different geography.
Sure. And Fambo's farm to fork integration and AI powered supply chain are the key differentiators, right? So how have these innovations improved efficiency and quality for your clients?
So, and I talk about that way. So earlier in the Indian food space itself, the traditional systems were being used. If I talk about the technology such as warehouse management system, it was more designed to handle the FMCG product, which have a higher shelf life. But when you talk about the food which is coming up from the agri produce, the shelf life is of utmost importance because shelf life is like 1 day, 2 days, 3 days. Now the infra, both in the form of hardware and the software, was not available. We designed the in-house tech here, which give us the optimum inventory level. Second, it also give us the correct inventory triggers, which can be maintained and which has to be maintained, which helps us to minimize the wastage here. So if I talk about our wastages, which we have is less than 2%. When we are able to get the wastage in such a low numbers, then of course the benefit is also scattered to the customer as well. So what sourcing inefficiency they were facing, that is taken care by us. Now, the commitment is not just the product which will come to you, but a product service combination that each product will come to you at the same time and each time so that your stores won't run out of the provision. So that is the commitment and that is what we abide to.
All right. And the funding is directly going to go into, like you pointed out, product innovation, team growth, and technological upgrades, right? So what specific areas or technologies are you prioritizing right now?
Is both in the form of hardware and the software. So we already have our software stack in-house. Now the same we'll be giving up to the vision technology, which we'll be using to increase the quality check of the production level itself. Second, the tracking of the product, which is getting produced right from the raw material level to the finished good level in the factory itself. So where the product is, the tracking inside the facility that will be ensuring. Now that is one traceability which I'm talking about from the product movement itself. Second, the hardware automation. So actually the co-founder team comes up from the automation, the robotics background. And we would be deploying this robotics to help and make sure what we are making is super efficient and is of the topmost quality. So these are the two vision where we're using the tech. Now, tech is something we are not looking forward to capitalize, rather using tech to make our business more enabled. So that is something which we are aiming at.
All right, with AgriSure Fund and NAB Ventures now on board, how does this partnership sort of strengthen Fambo's long-term mission of modernizing India's food service infrastructure?
So NAB Ventures or AgriSure Fund I talk about is already focused on the food and agri space itself. So this catapults us directly into the network which NABARD carries by its already state of working. Second, we are getting a good support already from NABARD where they are opening up their existing schemes, which we can further extend to the farmers via us. Second, like their network is completely open to us of the existing portfolio companies, so that work has already started. So what would have taken the timing of the actual effort has significantly reduced with having NAB Ventures and the Agishore. So that has significantly changed like the speed of the work what we are doing right now.
All right, Akshay, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much. Thank you.
Well, quick service platform Snabbit, which provides on-demand home services, has raised $30 million in a Series C round, which was led by Bertelsmann India Investments with participation from existing investors. Now, the company, which launched only last year, claims that in less than 5 months, it has scaled from under 1,000 to more than 10,000 jobs a day. This is its third fundraise in 9 months, and it hopes to use the fresh capital to launch in more micro markets and disrupt other high-frequency categories. For more on this, joining me now is Ayush Agarwal, the founder and CEO of Snabbit. Ayush, welcome to Startup Street. Thanks very much for your time here. 3 fundraisers in just 9 months. Where's all this capital going? And tell us about this latest $30 million raise.
Yeah, I think this is our third fundraise this year, and most of this capital is because the category is growing really fast. We're launching more micro markets, and we're seeing some exceptional traction on our platform across the 5 cities that we're live in. So we intend to use this capital to launch more micro markets, more cities, and also enter new categories such as cooks and childcare.
Well, Ayush, we understand Snabbit was valued at $80 million in its last round, and in just 5 months, you've raised this capital at $180 million. What has changed so dramatically, and how do you plan to deploy this money?
Yeah, so we are valued at $180 million. And I think this is urban India's last major offline habit. 60 million households spend roughly $750 a year, which makes it a $45 million category, which is growing at a double-digit CAGR. And only 2% of this is penetrated digitally. So this is basically a $100 billion category waiting to be disrupted, which just talks about how large and massive this potential is. Just to give you some context, when we last raised capital, we were doing roughly 1,000 jobs a day with roughly 500 experts on our platform. Today, we're doing north of 10,000 jobs a day with more than 5,000 experts on our platform. So we've grown 10x in the last 5 months. And that's why I think this valuation is fair and justified.
So you've gone from under 1,000 to more than 10,000 jobs a day. What kind of orders are you clocking in daily or monthly now? And what's the average revenue per order? And how is this expected to grow, really?
So we're currently doing, as I said, we've clocked 3 lakh orders in the month of October. Each order is worth roughly at 250 rupees, like roughly $3 gross of discounts. And we expect to increase this manifold as we keep going deeper into micro markets and launching more cities. So I think in the next 6 months, we expect this to be north of 50,000 jobs a day, which means we'll be doing 1.5 million jobs in a month.
How quickly are you looking to scale? Currently, Snabbit, we understand, is in 40 micro markets across 5 cities. What are the new markets you're looking to expand into, both in the near and the longer term as well?
So we're currently looking at the top 10 metro cities as very, very clear areas of potential for us to launch and scale. So I think getting to 200 micro markets within the top 10 metros is clearly on the plan for the next 6 months. And I think that alone will drive the growth that we're expecting in this category.
Well, you spoke of, eyeing these on-demand home services in high-frequency categories like cooking, childcare, elderly care. How large is this market in terms of demand, and what sort of revenue boost will these additional services give to your top line?
I think these are billion-dollar categories that are completely undisrupted. Before Uber and Ola came into India, the entire mobility ecosystem was undisrupted, fragmented, and unorganized. And look at where we are today. Almost like 25% of the rides are currently digital. So I think that's the kind of disruption that we're looking at in this space as well. House help is obviously the category we started with, but there's so many high frequency categories that are currently entirely offline, and Cooks is a really large one, completely offline, and we're waiting to disrupt it.
Ayush, you're a young company, we understand, but just out of curiosity, in terms of profitability, where are you at and what's the roadmap to get there?
So we're obviously very early and we're launching and growing extremely fast. So we are investing in growth, which means that, we're obviously not profitable. But I think the best part is that this is a very asset-light business, no third-party logistics, no warehousing, no inventory. And we have a very clear line of profitability with our most mature micro markets turning fully profitable in the next 3 months or so.
Well, finally, over the long term, what's your plan for Snabbit? Competition's also rising from new players, even established players like Urban Company and others. How are you going to defend your moat and continue to scale?
Yeah, so look, if you look at the last 25 years in India, every 5 years, one big offline category has been disrupted. 2000 it was travel, 2005 it was e-commerce, 2010 was mobility, 15 was food delivery, and 20 was quick commerce. 2025 is that time when we'll disrupt high frequency services. This entire playbook, this entire category has been launched and built by us, and we're clear market leaders today. We wish to extend this lead because we understand this category best. We know that given how promising this category is, we will see incumbents come in and we will see a lot of competition. But I think we have the execution excellence that is required, and we have a really solid team that puts in a lot of effort every single day to make this successful. Very confident of making sure that we'll continue to leading as we explore and disrupt this category.
Well, Ayush, we'll leave it at that. Thank you so much for your time here on CNBC-TV18 today.
On that note, it is time for us to head into a short break. But coming up next, digital trade finance and B2B e-commerce company bags $50 million. We decode how the firm plans to use the funds. On the other side, stay tuned.
Well, Grip Capital, a digital trade finance and B2B e-commerce company, has secured $50 million of committed credit with an additional $25 million accordion feature from TD Bank, marking its first such partnership or engagement with the bank. Now, Grip Capital has financed more than $8 billion in trade transactions for more than 11,000 companies across 100 countries since it started, and this latest facility is going to help the companies buy a finance program across North America. For more on this, joining me now is Pushkar Mukevar, the founder and CEO of Grip Capital. Pushkar, welcome to Startup Street. Thanks for your time here, and congratulations on that $50 million, fundraise from TD Bank. Start by telling us why TD Bank and how does this partnership fit into your global expansion strategy?
For a trade finance platform like ours, lending partners or banks are really providing the raw material and onboarding these institutions. And I think as we've been sort of scaling up, onboarding large institutions has been critical to our strategy of really expanding the platform. I would say that the TD Bank partnership, I think with TD Bank, our relationship probably started about 2 years back. And of course, they've seen over the course of these years how our platform has performed, how we've been successful in not just scaling up the platform, but also delivering strong performance on the credit side, right? And I think that's the reason they've come on board. And the partnership is really focused on helping support our expansion plans in the US and then over time, of course, globally as we scale up the trade finance platform.
Well, you're using this facility to expand your biofinance program in North America, which is a market with big players already in the supply chain finance space. What will be your edge there?
Our experience in North America for the last 5 years has been that while it's a large market with a lot of players, I think there is still a very large market opportunity which still exists in the mid-market and the small business space where banks have been conservative, and that's what creates opportunities for alternate players like us to capture that market. And more specifically, I think given our specialization in cross-border trade, we see that the way we have structured our product, it really works very well for a lot of the importers based in the US. And that's where we've seen strong demand for our product.
Well, Pushkar, what will be the contribution from the market considering India is already your largest and fastest growing market at the moment?
I would say yes, India is our largest market. And besides trade finance, something which I should mention is that last year, we also launched a B2B commerce platform, again, focused on Indian small businesses, where the idea is leveraging our network of suppliers and buyers globally. We are able to connect Indian small businesses with both overseas suppliers and overseas buyers. So that's also another growing area. But I would say that India would continue to remain a key focus. And I think as the company scales, we would continue to see India continuing to be a larger part of our overall business. However, we see ample opportunities in North America.
You said Grip has financed $8 billion of trade transactions since it started. And last year alone, you did about $2 billion in disbursements. What is the target for the coming year or so in terms of disbursements for the company?
So we are targeting a growth of about 25%, at least for the next 2 to 3 years. And that's what we would look at.
Capital, of course, is raw material for you. You've raised over $500 million in debt. Is an equity raise or IPO on the horizon, or are you going to double down on strategic debt partnerships going ahead?
So we're doubling down on strategic debt partnerships. We did close an equity round last year, and we've been profitable actually since then. And really the idea is that at least for the next 2 years, just want to scale up the platform. We would potentially contemplate an IPO, but not in the near term. I think at least 3 years out.
All right, we'll leave it at that. Pushkar, thank you so much for your time here today. It was a pleasure speaking with you. Thanks very much.
At a time when India is positioning itself as a global AI powerhouse, a report by CXXO, an initiative by Kalari Capital, reveals that women make up just about 20% of India's AI workforce. On the sidelines of TiECon Delhi 2025, CNBC-TV18's Aishwarya Anand spoke exclusively with Vani Kola to understand what this means for India's AI ambitions. Take a look.
Well, AI is very new. Correct. And new and change aren't always easy to embrace, and accessibility of tools and opportunities are also very dependent on networks that enable that for you. And those are things that I think we start with a back step, right? Women start with a back step. But we have to be optimistic, which I am. AI, more than any other technology from before, has the opportunity to truly be transformative about the elusive goal of equal participation. So I think it's less about what is holding women back, more about how do we raise awareness for it and how do we encourage more to join, because knowledge and technology, core technology is not a barrier. There are tools that allows you to truly train yourself and be representative in democratizing solutions, and you can do that without having to be a technologist or an engineer with the help of AI.
Okay, so that brings me to the next part of the question, which is when we look at the funding ecosystem, right? Women-led AI startups have received less than 10% of the total funding that was raised by AI startups since 2020. So from where you sit today as an investor, what's driving this disparity, and how can the venture ecosystem course correct?
You know, I know we want everything to be neatly boxed,
Yeah.
but life doesn't work like that.
Yeah.
For venture ecosystem to course correct, we also need to first create aspiration for more women entrepreneurs to be leaders, and for more women to be entrepreneurs, leaders, and founders. And that's what today's event, conversation, the report is, to raise awareness, increase, of course, networks, and increase the community that can mentor, champion, angel fund, open those networks to them.
Correct.
Right?
You know, through the CXXO program, you have been directly supporting women founders for years now. So I want to understand that, could you just shed some light on how much capital till date have been deployed to women-led startups, and what outcomes have you seen in terms of scale-ups, in terms of exits or follow-on funding rounds?
So we started putting together specific allocation of capital, and we started with $15 million only specifically for women founders, especially to give them that early seed capital, right? And I feel for every dollar we invest into enabling a woman, they will then be able to leverage that in time and raise $100, right? Almost all of the companies, fortunately, have received follow-on funding, and that shows that, you know, if you kind of give that initial energy and push and mentoring, lots of good things can come out of it.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.